Hi everyone, this is Michael. In this video, I'm going to give a market update and I'm going to talk about interest rates and what that means for buyers, sellers, and investors. So basically, most people know by now that the Fed is looking to hike interest rates or continue to hike interest rates to curb inflation. And the Fed Chair Jerome Powell recently said that he's looking at a reset in home prices. And he gave a CNN interview where he clarified that position. And I'll just read from that here quickly. He said, "When I say reset, I'm not looking at a particular specific set of data. What I'm really saying is that we've had a time of red hot housing all over the country, where famously houses were selling to the first buyer at 10% above the ask, even before seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Houses were going up at an unstable level." My thoughts on this is twofold. And the first thought is that he's right. Housing prices have been increasing for a long time. Interest rates have been very low for a long time. And the second thing is that he's being contradictory and he let the cat out of the bag. And he was being contradictory by saying that he's not looking at a specific data point, and then in the next couple of sentences saying that they're looking to correct supply and demand, which is looking at a specific data point because supply and demand is a data point. So the cat of the bag moment is him saying that. And what that basically means is that they're going to look at raising interest rates until they feel that supply and demand matches with more normal or maybe historical normal levels where they've been so out of whack for many years recently. And what this means for a typical purchaser and how it correlates in the market is that a buyer is going to say, hey, look, 6-7 months ago, I could get this house, $500,000 house at 4% interest, and my payment would be $2,400, roughly, give or take, not included taxes, insurance. And nowadays, that same scenario, $500,000 but 7% interest, which it is now, they're going to be paying roughly $3,325, which is a $925 increase. So you're going to be paying roughly close to $1,000 more for that same house, just because the interest rates have increased so much. And this has already caused a decline in value where I live in the Puget Sound region. In many markets and many market areas around here have seen a decline correlating roughly with each time they raise interest rates. And so it is having the impact that they're looking for it to have. And now I'll give kind of my advice and what I think about my opinions, what I think about this particular market that we're in. And my advice for purchasers is that it is a good thing. And that is because of two things here. And one thing is that if given the choice between a high price and a low interest rate, or a low price and a high interest rate, and the payment being the same, you would want the latter, the low price and the high interest rate, basically because the principal balance is going to be lower. The interest rate can be paid down in lump sums, and it can be refinanced. And I'll talk more about this in another video, but that's basically it. That's why most people would prefer the latter. And the second reason why this is good for buyers or investors is that it has the potential to have an influx in the market or have the market have more short sales, REOs, and HUD homes hit the market, because there's going to be people who had bought their home 7 months ago or so at the height of the market, and now today they're looking to sell, but home values have decreased, coupled with the cost to sell a home. They're going to sell for something that won't cover what they owe on principal for the home. So they might have to go to a foreclosure or try to negotiate with the bank for a pre-foreclosure. And those type of properties are going to make the housing market just more competitive in general. If you have bank-owned properties hitting the scene and you're a seller and you have to compete with those properties, then you're going to be looking at a situation where the bank is going to, if they want something off their books, they just lower the price. It's not that big of a deal to them as much as it may be for typical sellers. And that's going to be good for investors, because there's going to be more opportunity there. For sellers, I think that the message is that you want to sell as soon as possible, and before interest rates continue to rise, and get the most money for your home. If you even thinking about selling right now is the best time, because if you wait a few months, interest rates could rise, and that, you could be in a completely different market. If that has already kind of happened and you don't want to sell now, you don't think you're getting top dollar for your home, or you might want to sell in a little bit, but you may or may not this and that, I would strongly suggest looking at renting your property out at that point, because at the current interest rate, and being that the market hasn't fully adjusted to that interest rate, a lot of buyers are going to look at the prices and the payments that they have for houses, and they're going to alternatively look at renting, because it's going to be much more attractive now than it was months ago, because of the rise in interest rates, and the prices haven't fully adjusted to that. So you might see more pool of renters here currently and in the coming months, and that might might have an impact on market rent, and you might get a higher amount for your home just because of that in rent. So that's a good option. And finally, for investors, I'm going to say that most of my investors that I'm talking with are looking to wait and see, and basically they're waiting to see if there's going to be any more interest rate increases, and they're also waiting for the market to fully adjust to the new interest rate increases. And I suspect that can be very soon. I'm probably going to be showing tons of investment properties in the coming months, and maybe over the winter months, January, February, something like that. There's going to be a lot of opportunity, I believe, given the certain circumstances that we are looking at now. I hope that you out there were able to get something from this video, and get out there and get you a rental property or something like that while the getting's good, if possible. And if you're a seller, then try to take those tips and couple them with your own situation, and hopefully I helped a little bit, maybe with decision making or something like that. If this was helpful, please like, subscribe, and I'll come with a new video here as things develop and change. And I hope everybody has a great evening. Goodbye.